Hello, everybody. Let's get started right away. S&P 500 is down 0.7%. Dow Jones and Nasdaq down 0.8%. Russell 2000 down 0.8%. VIX is up 3%. Gold is up 3% today. Let's read our article. Markets are turning down a little bit in the afternoon, led down by healthcare. That's interesting. Healthcare sector has been a very strong part of the market over the recent periods, and yet today it's down quite a bit. So I'm going to look into that. Let's see what's going on over there. Um, where's our Reuters article today? Oil prices are up 3%, 4% to $59 per barrel. The yield curve has steepened a little bit, a couple of basis points. 30-year Treasury yield is up 3 basis points. I think these budget negotiations, the government is promising lots of tax cuts, even though Doge hasn't really done much. So it looks like the deficit is going to continue to increase. And yeah, it's going to be really interesting to see how these yields perform, the longer end of the yields perform in the coming periods. All right, let's read CNBC article today then. I can't find the Reuters one. Stocks slipped Tuesday after President Trump take commentary on global trade deals, dashing hopes that progress will soon be made on the tariff front. Investors also await the Federal Reserve's policy decision. By the way, please let me know how the audio quality is. If you can get a chance, either on X or on YouTube, that would be helpful. Thank you. Let's continue. Dow Jones lost 320 points, or about 1%. S&P 500 shed, Nasdaq about the same. Shares of Tesla shed more than 2% after the company's new car sales in Britain and Germany fell to their lowest in more than 2 years in April, even though demand for EVs grew. So we knew that this was going on for a while. It's not hitting the headlines. The stock hasn't really reacted as it would have if these news weren't baked into the stock price already. But yeah, Tesla is losing lots of market share in Europe. That is also the case in China due to competition. I think different reasons. China is more about competition. Europe and US is more about maybe lashback against Elon and some competitive forces as well. Looks like we're having some issues on audio quality on YouTube. I'm not sure what's going on, but maybe it'll source itself out like yesterday. Okay, let's continue. Goldman Sachs shares dipped by less than 1%, pulling the Dow lower. Tech giants Nvidia and Meta also declined. Stocks wavered after Trump met with Canadian Prime Minister Mark Carney on Tuesday afternoon, marking the start of negotiations between the two leaders since Carney assumed office earlier this year. Trump, during the meeting, walked back on promises that trade deals are on the horizon, saying we don't have to sign deals. His statement contradicts Treasury Secretary Scott Bessent's comments earlier this week. Bessent told CNBC on Monday that we're very close to some deals, echoing comments Trump made himself on Sunday that agreements could come as early as this week. Bessent had reiterated the sentiment in testimony to the House Appropriations Committee on Tuesday, noting approximately 97 or 98% of our trade deficit is with 15 countries. 18% of the countries are our major trading partners. And I would be surprised that if we don't have more than 80 or 90% of those wrapped up by the end of the year, and that may be much sooner than that. Yeah, well, that's still a couple quarters of uncertainty. And that leaves out China, which sounds like it's going to be a multi-year process. Interesting. All right, I'm going to restart YouTube real quick. Give me 1 second. restart YouTube real quick. Give me 1 second. Okay, it should be better now. All right, let's continue. To be sure, official trade deals between the US and its trading partners have not yet been announced. And while data issued on Monday from the Institute of Supply Management showed stronger than anticipated service sector activity in April, concerns around tariffs persisted. I don't know. I think stronger than anticipated is a stretch for ISM services. Um, it's slightly better than expected. Okay. We'll probably go down to new lows even when Trump dials back China to 50%. Billionaire hedge fund manager Paul Tudor Jones told CNBC on Tuesday. He'll dial it back to 50% or 40%, whatever. Even when he does that, it will be the largest tax increase since the 60s. So you can kind of take 2-3% off growth. I agree. That's my view as well. The Fed began Tuesday its 2-day policy meeting with a decision scheduled for Wednesday. The central bank is expected to widely expect to keep rates steady on Wednesday, with Fed funds futures trading suggests a 2.7% chance of a central bank cutting rates. Yeah, actually that probability increased a little bit this morning from 2% to 3%, which is interesting. That slight tick up in the probability of rate cut is kind of interesting. Decision coming in 24 hours. Still, traders will be listening for Fed Chair Jerome Powell's comments on his economic outlook. Despite external pressure on lower rates, the Fed will likely hold strong on the current pause until we see greater clarity on the major economic factors impacting the economy, the chief economist at TruStage said. As the impacts of tariffs settle in, we will broadly expect the economy to continue to shift towards a slower pace of growth than in recent months. Yeah. Um, Yeah, and I think pretty much everyone agrees at this point that there won't be a rate cut. The question is, when will the next rate cut be? When will the next rate cut be? Um, and let's look at what the market price is in right now. If I go to CME Fed Watch, right now the probability of a rate cut for June is 1/3, 1 in 3 chance that there will be a rate cut in June. Major swing from last month where it was 2 in 3 chance. Now the market now expect the first rate cut or rate cuts to resume to be in July 30th. So that would be May, June, July, 3 months, 3 full months from now. And I think June is actually in play. Like it's going to be really hard. It's going to be really hard to. Let's see what he says tomorrow. I think tomorrow what he's going to say is he's going to signal uh, no cut in June, but then I think they will end up cutting in June. So that's my working theory right now. I think the employment market is weakening faster than people realize. I think the employment market is weakening faster than people realize. And so, yeah, it's going to be interesting to see what he says tomorrow. Maybe we can dig into a little bit more tomorrow morning or tomorrow during Tesla Live. The decision is expected to be, let's see here, at 2 o'clock. So we'll have our 1 p.m. Eastern space. We'll make sure it ends in 1 hour at most, preferably shorter. And then we'll talk about what he's going to say. I'll make some predictions, and then we can compare after the fact, after the press conference. We can compare it on to Thursday. So Thursday we have the initial claims, continued claims come in Thursday morning. Um, and then we have unit labor cost preliminary for Q1 and productivity for Q1. Um, I think construction jobs are about to fall off a cliff. I think construction jobs have been strong. They've been positive way longer than people thought. But I think home prices are starting to decline now. Sellers are starting to come to market, and buyers are not stepping in. Price cuts in housing have increased. They remain high. Um, Cancellations after pending sales has increased as well, and that all happened before headlines started showing prices declining, housing prices declining, kind of stuff. So I think construction jobs are about to start to come down now. That's probably next. Inventory of unsold new homes is highest since the Great Recession, and some states are faring worse than others, like Texas is not doing really well in terms of housing front right now. So we'll see. Okay. Anything else we need to cover? There's Palantir news. I didn't really look into the data, but it's obviously a very highly priced company, and it's going to be really difficult for Palantir to grow into that figure. But it's obviously one of the leading AI companies with good prospects, good growth, good profitability, free cash flow, good balance sheet, cash on the balance sheet, not much debt if any. Um, Probably a bit of a monopoly position, I guess, but I'm not sure how difficult it is to replicate what they do today. So I don't know. Like the valuation is just insane. It's really hard to um, justify this valuation. And the stock had pulled back up to its all-time highs. It's even though it's now down 13% today. Um, PE ratio 468, $250 billion market cap. Um, they've beat on both earnings and EPS for the last 4 quarters. Top line increasing about 30%. The pace of the growth has actually accelerated in the last 4 quarters, I guess. But yeah, it's going to be interesting to see where this company goes. I'm not a buyer here. I'm not buying. It's I don't know. It's hard to buy this stock at this valuation. All right, let's see. DoorDash is down 9%. Not sure what's going on there. Microsoft is flat. Ford announced earnings, and then I want to look into healthcare sector. Let me see if I can pull up maybe one of these companies. Let's see what the news is there, and then let's look at some headlines. Diamondback CEO says this oil price doesn't work. So below $60 oil prices are not going to stay around for too long, I don't think. Intel shareholders approve equity incentive plan, new CEO pay. Interesting. Let's look into that. Let's see what the pay structure is like. Intel shareholders on Tuesday approved a company measure aimed at topping up share reserves to attract and retain new employees and compensation for the new CEO. Intel shareholders also approved the company's board of directors, though the 3 members did not stand for re-election. Intel shareholders rejected 3 shareholder proposals that would have required the company to reassess its operation in Israel, produce new reports on charitable giving, and give shareholders the right to act by written consent. Okay, no details provided. DoorDash is on a $5 billion buying spree after earnings beat. Not sure what that means. DoorDash buys 7 rooms, Constellation Energy, Miria Outlook. Okay, let's look into that. AMD ARM offer window into AI landscape ahead of NVIDIA earnings. I'm seeing more and more signs of data center um, build out decelerating quite a bit. So more new signs today. Let's just leave it there. In a matter of 5 hours, the US delivery firm DoorDash announced two multi-billion-dollar acquisitions that stand to turn what is already the largest food delivery service in the US into a formidable global player. It agreed to buy London-based PLC, um, and it's acquiring hospitality tech company Seven Rooms for $1 billion. Alongside the deals, DoorDash also issued a strong orders outlook for the current quarter and posted better than expected gross order value for the first 3 months of the year in a statement on Tuesday. Interesting. The company's buying spree highlights DoorDash's ambitions outside of the US, where it already commands about two-thirds of the food delivery market. Interesting. I didn't know that. The company's buying survey highlights DoorDash's ambitions outside the US, where it already commands about two-thirds of the food delivery. See, I thought Uber Eats was a bigger player than it is. I guess DoorDash kind of dominates that space. A takeover of Deliveroo will expand its reach to more than 40 countries, DoorDash said. Wow. Two companies combined had a gross order value of about $90 billion last year and have 50 million monthly active users. Wow. The delivery industry has been consolidating after a slowdown from pandemic level highs, leaving room for a dominant player like DoorDash to grow even larger. Also on Tuesday, Uber said it's buying an 85% controlling stake in the Turkish delivery app Trendyol, Trendyol Go. In February, Prosus NV agreed to buy Amsterdam's Just Eat Takeaway.com, while billionaire Mark Lower's Wonder Group closed acquisition of Chicago-based Grubhub earlier this year. Our focus has always been build a great product, not just for consumers, but merchants, as well as dashers and couriers, said DoorDash CFO. The deals provide an opportunity to invest across a broader set of countries and bring our product experience to that got us to number one in the US, as well as number one in all these countries into delivery geographies as well. DoorDash shares dropped 10%. Wow. Sidebar. DoorDash's acquisition of Seven Rooms will give it a reservation platform and customer management tool similar to OpenTable or Resi that works with more than 13,000 restaurant groups. That's incredible. Its clients include Marriott, MGM, and Wolfgang Puck. In 2022, DoorDash worked with Seven Rooms to pilot restaurant reservations within the DoorDash app in New York, Los Angeles, and Chicago. In addition to restaurant delivery, DoorDash also offers white label services to build ordering interfaces for restaurants' websites and phone answering service systems. Interesting. CEO Tony Xu said DoorDash's philosophy on deals hasn't changed. The bar continues to remain high for M&A, he said in a call with analysts on Tuesday. Sometimes the timing of some of these announcements aren't or can't be perfectly forecasted. But what I would say is it really is a business as usual. The delivery deal is expected to close in the fourth quarter of 2025, while all cash Seven Rooms purchase is expected to close in the second half of this year. Both transactions will require regulatory approvals. And in the case of delivery, at least 75% of the company shareholders will need to give their blessing. So far, investors representing 15% have agreed to sell their shares, including CEO. DoorDash's acquisition of Deliveroo and Seven Rooms suggests the company is focused on boosting user growth in the UK and layering AI capabilities for its fragmented merchant base. Interesting. Yeah, this is a very interesting story. Let me just look at the stock real quick. Down 8%. Ah, it's actually all-time high, near all-time highs. PE ratio is 660, market cap of $80 billion. Hmm, interesting. Let's look at the financials. Revenue growth about 25% per year. Net income just turned positive. You're generating about $500 million per year run rate. net profit margin of about 5-6% in recent quarters. Hmm. DoorDash. Interesting. For the current period, DoorDash sees gross order value of $23 billion. It said in the statement, surpassing Wall Street projections. The company said the results show consumer demand remains strong. Well, I don't think that necessarily true. Like, what if, for example, people are using DoorDash and Uber Eats as opposed to going out to eat? And there's also signs that UK may already be in a recession, and US is also entering a recession. So um, I don't know. I don't know if, yeah, interesting story. But what do they do that Uber Eats doesn't do or can't do? I don't have an answer to that. Total order value and number of orders for the first quarter surpassed expectations, reaching record quarterly highs. DoorDash credited the beat to its continued push into non-restaurant deliveries. Specifically, it cited strong signs of increasing consumer trust in the grocery category, with accelerating average spend per grocery consumer and increasing average spend on perishables. Okay. Total revenue for the quarter was 3 billion, just missing the average analyst estimate, while net income came in at 193 million, ahead of the consensus. So they missed the revenue. That's why the stock is down, I guess. Ongoing investments to enter new categories in international markets, however, weighed on DoorDash earnings forecast. Adjusted earnings before interest, taxes, EBITDA will be 600 million, 650 million, with the midpoint missing the average estimate of 637 million. Okay. So one of them was all cash, and then the other one doesn't say. Seven was all cash, which is a billion. The other one's 4 billion, and it doesn't say if it's stock issue or what. What's their debt level like? Let's just curious. Let's check that real quick. DoorDash investor relations. Total assets 12.8 billion, 13.6 billion as of March. 7.8 current, so half current, 4.5 billion cash and cash equivalents. Okay. And accrued expense other liabilities 4.2 billion. Is that it? Where's the breakdown of debt? Um, revenue increased from 2.5 to 3 billion year over year. Um, they don't show gross profit. That's weird. It looks like cost of revenue, exclusive of depreciation amortization, increased 270 million. Revenue increased about 500 million, 270 million. Okay. R&D increased a little bit. Sales and marketing increased 80 million. Interesting. Interesting. Um, looks like they invest in T-bills, their cash. The depreciation was 150 million. Stock-based comp, 250 million. Yeah, it's an interesting business. And then they show the last 5 quarters as well. Contribution margin 30, 31, 34, 34%. Gross margin 40, 45, 47, 47, 48. So margins are improving. Yeah, this is very interesting. Um, $80 billion market cap. 80 billion market cap. Or cash. Where's my debt number? They don't say. Accrued expense and other current liabilities. I mean, it's like I'm sure there's some expense debt in there. Restricted cash of 20 million. Short-term marketable securities of $6 billion of cash. Yeah, so clean balance sheet. A bit of goodwill risk there. Um, it just turned profitable. They're doing half a billion. Let's say 80 billion, 75. Let's say, let's say a billion. Oh, so expensive. So expensive. Um, 80, your revenue is about running at about 12 billion, call it 15, 5, 6x revenue. Yeah. Add it to the list of companies to buy if there's a recession and the stock halves. Let's do that. Take some notes. Very interesting company. I mean, what I want to understand is how are they able to dominate like this with Uber Eats around, right? Okay, I'm gonna look into this a little deeper later. All right, let's move on. Phillips cuts profits, sees $300 million impact from tariffs. BHG. Um, the Dutch medical device maker. Okay. What else we got? Essence says US on debt limit warning track, but no timing yet. I think it's gonna be around August, if I remember correctly. Tariffs that triggered one big rethink on tech. VC founder says tariff latest. Trump hints at pharma tariffs set to meet Carney. Yeah, so I used to think that maybe we're gonna get the inflation impact by Q3, but I think now um it's looking more like June numbers. I think we're gonna get more than I expected early on. I got some new information today that changed my view a little bit. And I think that the June numbers are gonna show some tariff impact that's gonna raise some eyebrows. So let's write that down. So we have May 6th. This is a bet with myself. June CPI will show enough tariff impact to surprise. I'll think of a better wording. upward. So if that happens, so July meeting for the Fed is end of July, July 30th, I think. Let's see. So CME Fed Watch July meeting is on July 30th. And right now the market is expecting a cut by July. We're talking about an 80% probability of a cut. So, but if June inflation numbers come in higher than expected, like I believe is going to happen, then this could this could switch quite a bit. So, so another bet I'm going to make is bet Powell will basically prioritize or stress tariff war, tariff war uncertainty a number of times tomorrow to signal higher for longer rates, higher for longer. Yeah, yeah. I don't think these rates are coming down as soon as the markets expect. Okay, let's continue. U.S. trade deficit hits record high as business consumers try to get ahead of Trump tariffs. What customers can expect? Rite Aid closes sells its drugstores. Okay. SEC ends inquiry into Morgan Stanley's cash sweep program with no enforcement action. Okay. Gold gains as investors digest best in comments, await Fed. Google's new simplify feature for iOS use AI to make dense text easier to understand. Okay. Uh, okay. So not much news. Palantir slides at earnings spotlight irrational valuation. Really? Okay. Trump meets with Carney, says we don't have to sign trade deals. Okay, Rivian earnings Rivian's announcement? Okay. Will tariffs push Rivian deeper into red? Yep. Um, all right. And then in Tesla news, Waymo made an announcement today or yesterday, scaling our fleet through US manufacturing. I think this is a piece of news that Tesla investors should really take to heart, kind of think about, ponder. Um, and we're going to go through this real quick. This link is at the top of our screens. The US is leading the world in development and deployment of autonomous driving technology. Today, Waymo One provides more than 250,000 paid trips each week across Phoenix, San Francisco, LA, Austin. And we're preparing to bring our fully autonomous ride hailing to Atlanta, Miami, and Washington, D.C. in 2026. We're proud to bring this technology, once thought to be the stuff of science fiction, to more and more riders across this country. Scaling Waymo One and meeting the increasing demand of our riders requires a growing fleet of vehicles integrated with a generalizable. So interesting. They add this word generalizable Waymo driver to support our growing U.S. ridership. We're investing in our American manufacturing operation with a new autonomous vehicle factory in Metro Phoenix with our partners at Magna. So Magna is obviously a very trusted brand. They provide a lot of services to all the automakers, pretty much all automakers. So partner with Waymo in Metro Phoenix, which is also an interesting choice. Waymo driver integration plant will build thousands of Jaguar I-Paces equipped with our fully autonomous technology. Thousands. So that's a very rapid growth, which we designed and assembled in the US. At 239,000 square feet, this factory is a multi-million-dollar investment and has created hundreds of jobs in Mesa, Arizona that support our future growth plans. The new Waymo and Magna manufacturing facility in Mesa is the latest example of Arizona being the new home for technology to innovate and growth, said Arizona Governor Katie Hobbs. I'm proud to see autonomous vehicles on our streets every day, helping get people where they need to be safely. The new manufacturing facility will enhance its presence, and the local jobs it's creating will help Arizona's tech economy continue to rise on the world stage. Waymo One has grown substantially in the last couple of years. We've also incrementally grown our commercial fleet as we've welcomed more riders with over 1,500 vehicles across San Francisco, Los Angeles, Phoenix, and Austin. So basically, Waymo has now proven that this service works, and I guess they feel confident that they can turn profitable at some point. In a handful of cities over the last handful of years, with hundreds of vehicles, now about 1,500, I guess, and they're going to produce thousands of vehicles. So now they're going to from proof of concept to growth stage. And as we talked about, it's really not going to be very difficult for them to get to tens of thousands of vehicles too. I mean, Tesla was producing thousands of vehicles back in um, 2011, 12, thousands per year. And then they got to tens of thousands in the next couple of years. So if Tesla did it, more than 10 years ago, I think Waymo with Magna's experience, they're going to be able to go from thousands, 10,000s in a couple of years. So I would expect Waymo to have by 2028, 2029, tens of thousands of vehicles in the US alone, and then hundreds of thousands around the world a couple of years after that. Yeah. Um, Earlier this year, we received our final delivery from Jaguar, and through next year, we will build over 2,000 more fully autonomous I-PACE vehicles for our fleet. The Waymo driver integration plant in Mesa is the epicenter of our future growth plans, said Ryan McNamara, Vice President of Operations at Waymo. With our partners at Magna, we've opened a manufacturing site that enables the cost efficiency, flexibility, and capacity to scale our fleet to new heights. This facility's flexible design also enables us to integrate the sixth generation Waymo driver on new vehicle platforms, beginning this year with Zeekr. With the need to build multiple platforms simultaneously and at higher volumes, the plant will introduce an automated assembly line and other efficiencies over time. When the facility is operating at full capacity, it will be capable of building tens of thousands of fully autonomous Waymo vehicles per year. So there you go. So this is going to be just the same facility. It's going to go from thousands to tens of thousands per year in a couple of years. Rider ready from the factory. After the driver is installed, the system needs to be validated and commissioned before carrying drivers. With this new facility, we recently implemented new processes and efficiencies at the end of line that significantly reduce the time and cost required to enable a vehicle to carry riders. And of course, this process is going to improve over time. And I have very little doubt that Waymo will be able to replicate the production cost of Tesla robotaxis, which aren't going to be coming for the next 5-10 years. This new strategic capability allows vehicles assigned to our Phoenix fleet to drive themselves out of the facility and directly into service. In fact, these vehicles can pick up their first public passengers less than 30 minutes after leaving the factory. For vehicles intended for other cities, they can be deployed into public service in a matter of hours after being shipped to their local depot. This new manufacturing plant, combined with more efficient vehicle launch processes, means we can serve more riders faster. And if you're interested in experiencing a ride for yourself, download the Waymo One app today. Yeah. All right. So this, I think Waymo won the robotaxi race. On that note, unless there is any other questions, comments, we're going to end the space. Tomorrow is the Fed meeting. We covered the Waymo news. That's probably the most important news. The other thing on Tesla is the deliveries. I expect 1.6 million deliveries this year, possibly even lower, but about 1.6 million for now. And I don't see Tesla's headwinds changing anytime soon in Europe or China. I think China is going to get worse, and I think margins will continue to decline, and I think operating margins will turn negative soon. And automotive gross margins could even turn negative, just like Rivian's situation. Starting in Q3, we're going to see a couple $1,000s of increase in cost per unit due to tariffs, as the CFO said in the last call. And I think Tesla will have a really difficult time trying to pass those costs on to the customer, as will other automakers. I think this race to the bottom in the automotive industry is not over yet. I think it's only just now starting. Because up to now, the economy did fine. The employment remained strong, but now is when unemployment will start rising. And in that situation, in that macro drop, I don't think people will be buying cars. All right. Thank you very much, everybody. And I'll chat with you all next time. Take care.